Hey everyone, welcome to Crystallines webinar titled Let's Talk Cyber Insurance Applications. For all you insurance brokers out there, we fielded a lot of questions on some of the details that come in and in cyber insurance application. Our kind of plan today is to talk through what these questions are, what they mean, why insurers are asking them, and what you can do if your clients do not have the controls in place. So a quick agenda. I guess first we'll talk more about what is cyber insurance. Why is it currently important? There's a lot of trends in regards to cybersecurity and cyber insurance that we'll touch on. Then we'll walk through the actual application and again, what these questions actually mean. For those watching at home or in person, what we want you to get out of this call today is afterwards understand the importance of what cyber insurance really is and how it can help your clients, a variety of clients, small, medium, and large sized businesses. And then secondly, be able to get the toolkit or understand the lingo. So when your clients are asking you about specific questions on a cyber application form, you feel confident to assist them in any of their needs, likely leading to help your agency. So what is cyber insurance, right? Cyber insurance transfers the financial risk of a cyber attack from your client to an insurance provider. What we mean by that is if a business were to be victim of a cyber attack, there's a lot of costs that they will have to be financially responsible for. And these are typically first party or third party losses. First party, an example would be, I have to pay a law firm or a PR firm or a ransomware. While a third party loss would be more something along the lines if a customer's data was lost and then they end up putting legal action upon your business, these would be large legal costs, right? A lawsuit. And they would have to pay them. So cyber insurance covers both of these kind of losses, specifically for a cyber attack. And if you have more questions on coverages, we'll have more videos on that moving forward. So why is it important? Well, there's three big trends to focus on, right? The first is that cyber criminals are now attacking businesses that are small and medium sized. 43% of cyber attacks are aimed at these types of businesses, which is very different than it used to be 5, 10, 20 years ago. The second trend is that cybercrime is on the rise. We've seen a gigantic number of increased reported attacks since the pandemic, over 600%. And the third trend to take note is that cyber attacks can be financially devastating. The average cost of a cyber attack in 2021 was $200,000. Now, for a large business, this might not be a big deal. For a small business, this could be really devastating. So we've seen 10 kind of very common questions on cyber insurance applications that we think folks should take note of. They're listed here. What we find is that every provider is asking some different question. And it's really tough for brokers to be able to understand what things they should care about, what things they shouldn't care about, and which questions, are the really important ones. What we've done is we've looked at a variety of providers such as Travelers and CFC, and we've kind of identified what these main questions are, and then we're going to walk through kind of how to build the lingo and how do you understand what they mean so you can better assist your clients. So the first question typically 10 out of 10 providers are asking today is, what is the previous cyber history of your clients? They want to know whether your clients have suffered a cyber incident, such as a system disruption, a cyber extortion, which actually is just a fancy word for saying a ransomware attack, or a data breach. What we're actually seeing is that insurers are fairly likely to deny coverage if your client has sustained a previous cyber attack. Which is, it's tough for these businesses because ransomware is really on the rise. Ransomware attacks are effectively when a business gets into your network, gets a hold of your data and then encrypts it in a way or jeopardizes it in a way that they have full control over it, and then they'll charge you, or sorry, you know, hold it for ransom. So then customers are paying these ransomware attacks off and losing a large amount of money. The second question that we're seeing a lot of is employee training. You know, the leading cause of cyber breaches are typically human error or human behavior. And, you know, that's kind of what you hear about with social engineering or phishing. So phishing is, of course, scam artists pretending to be portraying portraying a bank, portraying someone that you trust, getting a hold of some information, a login, a password, and then, you know, leveraging that against you. So the trainings that they're expecting employers to provide are trainings against phishing, and then also other security practices such as strong passwords or credentialing. And effectively, insurers will raise premiums if they do not see that employees are training their employees because of the link towards phishing and the number of claims that they see. The third question that they're asking that comes up a lot is who is responsible for cybersecurity within that organization? You know, who's in charge? What is their job title? How long have they been in that role? And a lot of times you might start hearing of this title called the CISO. Well, the CISO is the Chief Information Security Officer. They're the highest ranking officer at the company that is responsible for cybersecurity. A lot of times if businesses don't have a CISO, this might be a CIO, there might be an IT admin or an office admin. It really depends on the business. But effectively, insurers want to make sure that there is someone in charge of cyber within that organization. Otherwise, they also may likely raise premiums because they will not, you know, have trust or faith that the business will be able to protect themselves from cyber attacks. Okay, now some of the more trickier questions, I think. One of them has to do with data encryption, and they want to know whether you're encrypting your data, but there's a lot of different places and ways you can encrypt data. So let's dive into it a bit. Well, first of all, encryption is when data is encoded in a way that even if a cyber criminal were to get a hold of it, they wouldn't be able to do anything with it because they can't actually read it. It's encrypted. And you require essentially a key, a decoding or a decrypting key to actually leverage and use the data, which means that a ransomware attacker who gets a hold of encrypted data doesn't, you know, and as long as it's backed up, they won't be able to do anything about it, and you're effectively safe from this attack. They care again because of the prevention mechanism from data encryption, and encryption likely means lower premiums. You might see questions on whether encrypted data is at rest or in transit. At rest means that the data is stored in a device, and in transit means the data is being transferred over a network. So even if your data is stored at rest, if it's not stored in transit, bad actors can still get a hold of it and leverage it for, you know, bad intentions. And so it's important that it's encrypted in all kind of aspects of the network. Then they want to know if you're backing up your data. And kind of as I mentioned before, data backup is huge. It can really prevent you from seeing a lot of business disruption from ransomware and other attacks, because having your data stored means that if anyone were to get a hold of it or abuse it, or even if one of your employees screws up and deletes something, you have a fail-safe. But what they want to know is more, how often is it being backed up? Where is it backed up? Is it the backed up encrypted, and are you testing it? They want to be confident that your clients, their backup mechanism is up to date. It doesn't matter if you have a backup service, but it's only backing it up every year or every 6 months, because that's 6 months of data that you could still lose. Also, like I mentioned before, encryption is super important in backups because ransomware attackers can still leverage backup data if it's not stored securely and if it's not encrypted. This question is about incident response plans. So insurers want to know whether there's a plan in place for a client's business if something were to happen. And effectively, a business who plans, of course, will expect to see less financial damages than those that do not plan. And it really, sometimes people say it's not a question of if, it's a question of when, right? And when it happens, you want to be prepared. So an incident response plan details the list of roles and responsibilities involved in the business if there were to be a cyber incident. You can find free templates for this online. A lot of actually insurance providers, such as Cowbell or Coalition, will provide options. And businesses might not be aware of what this is, but it will help them potentially lower their premiums if they have something like this in place. MFA, multi-factor authentication, is pretty common nowadays. At least you hear it a lot because we know it as whenever you're logging into your email or logging into another system, typically you get a text, and the text is the second factor, the multi-factor. It's, a password isn't necessarily always strong enough. And so by testing whether someone also has the phone of the individual who's trying to log in, it's much more safe to ensure that no backed actors are actually getting in with stolen credentials. The tricky thing about MFA is that they're going to ask you about multiple types of logins. So they might say privileged accounts, which are effectively admin accounts, have MFA enabled. They'll be wondering if MFA is enabled in remote networks. So by remote networks, we need like a VPN or anything like that, and then email. These are kind of the big places where stolen credentials can cause a lot of damage. And they'll want to see MFA on all three. The eighth thing that we're seeing is antivirus. Antivirus is something we're all reasonably familiar with. If you remember seeing Norton antivirus on your machine, or McAfee antivirus on your machine. Anyways, it detects viruses that could come from an attacker sending you a malicious email or something like that. And it'll prevent them from spreading and detect it. So antivirus software is typically a requirement for a lot of insurers, and it also, if they don't see it, they will raise premiums. The last couple, one is cloud service providers, or CSPs. So what are cloud service providers? The three biggest ones are Amazon, Microsoft, and Google. These businesses effectively provide tech infrastructure to other businesses so they don't have to have their own servers, their own databases, etc. And it's actually made IT getting set up as a startup or a smaller business a lot easier if you leverage these cloud providers. Insurers are curious about it because leveraging a cloud provider actually is typically a fair amount safer than having your own servers or in your own database, especially if you don't have your own security team in place. AWS and Azure employ a large amount of security and have security controls in place to protect your data. That's not to say that folks who are leveraging AWS or Azure are completely irresponsible of security, but that they have additional security controls in place. The last thing we're seeing is a lot of questions on security standards. So a few of the ones that get thrown around is PCI-DSS, SOC 1 or SOC 2, or HIPAA. So PCI-DSS is data security standards to protect cardholder data. So if any of your clients are taking credit card information, this question is effectively targeting them and whether they're handling that credit card data appropriately. SOC 1 and SOC 2 are system and org controls. And then HIPAA focuses on healthcare. So if any of your clients are in the healthcare industry and storing or processing data that involves a customer's actual health information, the government requires stronger security controls on this data. And those compliance standards is called HIPAA. So definitely make sure underwriters are aware if any of your clients are following these security controls. Because if they do, it's kind of a stamp of approval that they have more security in place and they're less likely to get a cyber attack and may even lower their premiums because of it. So what if you're still struggling, right? Cyber applications are complicated, and a lot of times businesses don't have nearly any of these security controls in place, especially small and medium-sized businesses. Well, Crystalline helps lower cyber premiums by improving small to medium-sized businesses' cybersecurity. We're happy to provide a free consultation with any of your clients to review the cyber application, maybe help out if questions are unclear, and then help them switch the no's to yeses, right? Which will help make sure your clients can get insured and also lower their premiums. Feel free to reach out to me and Crystalline if you have any questions. We also want to hear from you. So if you've had struggles making cyber claims, if there are other questions you're having and you want to learn more, the material covered was valuable or was not valuable, please let us know. You can put it in the comments, send us an email, and we will be looking through and trying to make content that really caters to the questions you're getting. Thanks so much for listening. Really appreciate it. Have a good one.